This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Friday, August 23rd. Hope you all had a successful week. Let's jump right into today's session. I'm going to call it All-Time Lies at Jackson Hole. Just as a precursor here, I will have 27 charts for the paying subscribers. I also have about 8 chart requests specifically from paying subscribers, which I'll cover in the back half of the podcast. So let's cover, I'm going to go in order. I'll cover breadth first, and then I'll cover some of the directional news today. Taking a look at new highs, we had 1,378 new highs. We only had 72 new lows, so new highs are outpacing new lows. 85% of stocks were advancing on the NYSE versus 12% declining, and 30% of stocks were below their 50-day, whereas 32% of stocks were below their 200-day moving average. If you take a look at the Nasdaq, you had 175 new highs versus only 26 new lows. Taking a look at sectors, every single sector was green for the day. What led to the upside was real estate up 2%, technology was up 1.7, consumer cyclical up 1.68, basic materials up 1.64. You had energy up 1.6, industrials up 1.4, financials up 1.4, etc. When you take a look at the 1 week performance, energy was the only sector in red. They were down 0.2%. Real estate led the way up 3.5%. Obviously, they're anticipating rate cuts. Basic materials for the week was up 2.5%. Industrials 2.1%. Healthcare 2.1%. Consumer cyclical 2.05%. Financials 1.9%. Where's tech? Consumer defensive up 1.7%. Communication services up 1.3%. Utilities up 1.3%. And tech up 1.1%. So let's kind of peel the onion here on some context. What stuck out to me today, it's all about real estate, right? The real estate sector, the home builders were all up positive except for K. Hovnanian, which was up big after earnings, but was basically pulling back and catching a breather. Obviously, this morning you had Jerome Powell at Jackson Hole on the podium speaking about how much in control they are and everything is peachy. I told you that that's what would happen. And this rally was fairly obvious. If you've been following me on Substack and the podcast, I've been letting you all know stocks have never, I don't think ever, fallen while that man is talking in front of a microphone. So if you saw my Substack notes or my private chat on the channel, I even posted, hey, is anyone going to investigate this pump and dump? And if you saw, while he was talking, the markets were rallying. As soon as he stopped talking, the markets started going south. But then someone made a phone call and everything was A-okay again. But I want you all to really start to follow DXY, David X-Ray Yellow. That is the ticker for the US dollar index. And keep watching that $100 level. It got defended today, actually. It reversed from $100.60. If that goes below 100, that's not too good for anyone. It's not good for you or me. It's not good for the Fed cutting. Hypothetically speaking, fast forward till September. It's only a few weeks away. I'm just hypothetically saying, let's say by the time the FOMC is supposed to cut, let's just imagine the DXY goes to 85. They will not be able to cut, right? So they can only cut under the guise of everything's good, we have everything under control, America's strong, and we have enough room and slack to cut. So just watch DXY. You can also look at the currency pairs like US dollar versus Japan, US dollar versus the British pound, etc. But I've included these charts in the show notes. I have today's action, I have the 1-year chart, and I have the 15-year chart. If you ask me, it looks like under $100. The DXY will go to 90 at the very least. I also want to remind you all that once this buzz wears off of this Fed cut euphoria, I just want to remind everyone, every time, not sometimes, every time that the Fed has pivoted, the market has went south, anywhere from 18 to 24 months. So I'll post that grid as well in the show notes in the free section. In addition, every time that the Fed pivots, the unemployment spikes. Not sometimes, every time. So keep praying for that rate cut, and keep listening to these narratives and lies. So let's keep going here. So as you all know, I've been kind of, for the lack of a better phrase, picking on Harley Davidson in the context that, hey, there's like thousands of motorcycles that are brand new sitting in the showroom before all of this woke, anti-woke news started creeping up. And it's all a story. But if you do a nationwide search for automobiles, it's pretty bad. So I'll share those numbers right now. And once I cover the automobiles, I'll circle back to Harley Davidson. So if you take a look at Ford, GM, and Harley, or HOG, they were all green today on the hopes of a rate cut, hoping that people can get lower interest rates when they finance these vehicles. But I simply, you can do this too. It's not on Bloomberg, it's not proprietary. I simply went to autotrader.com. I did a nationwide search for cars that are brand new for Ford, GM. And then I did one model, which is the Ford F-150 pickup truck. So across the USA, there are 321,000 brand new Fords sitting at Ford dealerships this second. There are 233 General Motors vehicles sitting in dealerships right this second. There are 75,000 brand new Ford F-150 pickup trucks sitting at dealerships right now. So I don't know how long it's going to take them to sell that inventory. And if you don't know how this works, whether you're Harley or Ford, is when the manufacturer delivers these units to the dealer, the corporation books those as revenue and sales. So they're sold in the eyes of Harley, Ford, General Motors. But the independent dealerships that take delivery of those vehicles now have to find a way to sell those. So the real pain is going to be these dealerships that are privately owned, or even publicly traded companies that have like conglomerates of multiple dealerships. They're going to have a lot of pain, I believe, because it's almost the end of 2024. Next year is 2025 models coming out. And if you're a dealership, you have to take delivery of the next year's models. So that's going to be, I think, an interesting story developing. I didn't see many people talking about this. And then what I did was, instead of just picking on Harley Davidson, because I'm into motorcycles, I went to cycletrader.com and I did a search for brand new 2024 to 2023, like 1 year before, brand new motorcycles across the US. There are over 5,600 BMWs, 3,200 Ducatis, 11,400 Harley Davidsons, 23,000 Honda motorcycles, 5,200 Husqvarna motorcycles, 6,300 Indian motorcycles, 23,600 Kawasaki motorcycles, 12,000 KTM motorcycles, and 6,500 Suzuki motorcycles. I think Yamaha also had like 13,000 motorcycles. So these are all brand new machines, whether you're looking at GM, Ford, any of these motorcycle companies just sitting brand new at their dealerships. Who is going to buy all this inventory? Maybe you'll start to hear more about this in the general news. I also posted a chart on the show notes showing the declining volume all day. Today was Jackson Hole, let's just save face type of day. One other video I want to share with you, and I'll wrap up the whole automotive / motorcycle slant here. I found the video of a Harley dealership in California called Laidlaws. They've been in business for a long time, and it was a remodel of their entire dealership, and it looks beautiful. They probably spent 6 figures on this remodel. And what happens is, if you own a Ford dealership, a Harley dealership, or one of these hotel franchises like Marriott, Hilton, what happens is the corporation of the holding company will impose rules for your franchise or your dealership or your locations. And this happens with like even Dunkin' Donuts and other franchises where they mandate you must revise your location every like X years, 5 years, every 10 years, every 20 years, whatever it is. And some of these refurbishments can cost $200,000 to $1 million, depending on the footprint and the square footage. And if you don't do that, in the case of like a hotel, if you don't do that renovation every X times that Marriott or Hilton deems, you lose the flag or the brand, and you're no longer, a Courtyard Marriott, or you're no longer Hilton Garden Inn. And then you have to drop their name and you have to become a generic hotel. So, again, if this starts to impact revenue and sales, it's those mom and pops or companies that own multiple locations that are going to get hit harder. And you'll see that kind of trickle through. I'll go over what was strong. There wasn't many things weak today, but I'll just start from the top. You had Kava up 19%, MicroStrategies up 12.4%, Roku was up 12.2%, Marathon was up 10.6%, Hut was up 10%, Wayfair was up 9%, Rivian was up 9%, Uranium was big update for Uranium, up 7.98%, Restoration Hardware was up 7.8%, Bitfarms up 7.7%, New York Community Bank up 7.6%, Sweetgreen 7.2%, and Coinbase 6.6%. I'll leave the rest for you all to look at. But with that said, for free members, continue to watch the Mag 7 and the Semiconductor Index, as well as yields and the dollar. I will see you all after the weekend, after the Monday session. Premium members, please stay on. I have a lot to cover today, as well as your chart requests coming up right now. That's my train.
Stand clear of the closing doors, please.